Wondering just on your initial thoughts of if now really is a good time to be completing the merger. How do you feel about it?
Well, Taylor, first of all, thanks for having me on. And just one quick correction: I'm the CEO. Dr. Kennedy will remain chairman of the combined entities. But look, it's a terrible time, obviously, in the country, a terrible time in the world with what's happening with the COVID-19 pandemic. But the rationale for putting these two big businesses together was to create an aerospace and defense technology powerhouse. That is, to put two companies together who are strong in both the commercial aerospace and on the military defense side of the business, and to be able to combine our businesses and, most importantly, our engineering talent to deliver innovative solutions for the next generation of products. So, bad time, sure, but again, it's a great time for us to come together and get working on what's next.
This is Michael McKee. The question is not so much what's next, but when's next. You're big in aerospace, but nobody's flying right now. Nobody wants airplanes. When do you get back to being able to make money on these things, to produce?
Well, that's, I think, the $64,000 question, and I don't have a specific answer for you. All I can tell you is, having lived through the collapse of air traffic after 9/11, having seen the declines in 2008, 2009, all I know with certainty is that it will come back at some point. Probably not quickly. I think we see that in China today, where industrial production is picking back up, but people are still reluctant to get on airplanes. Departures in China are down 60% in March, even with industrial production coming back. So my own view, you're not going to see a recovery in air traffic until people feel safe to fly. And that means the COVID epidemic, pandemic needs to peak and then trough, and a vaccine has to be put in place. People have to feel safe. How long is that? It's probably not this year. We're probably not going to see a recovery. But things will get better, and we are here for the long haul. Our products have life cycles of 30, 40 years. We've got engines out there flying that have been around forever. So I think it's a matter of time, and we're just going to make sure that we're well positioned when we do come out of this to be stronger and ready for the next generation of aircraft.
Greg, always in times of a merger, and more importantly, during these times of an economic downturn, there are always discussions about cost cuts, trying to reduce some of the inefficiencies. Are you seeing any short-term cost cuts as you now really evaluate the merger, and then more importantly, try to plan and save any cash flow that you have as we look to be entering now a downturn?
Yeah, it's interesting, Taylor. I think as you think about the two companies come together, obviously liquidity is the first question people ask. And we have a very strong balance sheet. We've got about $7 billion of cash on day one. We've got access to $5 billion in credit facilities. So we're in good position. And if you think about 2/3 of our business this year will be in the defense space. We've got a $70 billion backlog there. Plenty of work to do there. About 3 weeks ago, we actually started on the commercial side. That is the Collins Aerospace and the Pratt business. Now, they both have big military businesses, but on their commercial aerospace piece, we have cut back on spending. We're reducing capital expenditures. We're reducing engineering, all the discretionary spending, all those things that just kind of running the playbook. At the same time, with the merger today, we're also looking for ways to move production facilities, production folks, and engineering folks over to work on some of the Raytheon programs. Raytheon ended last year with a book-to-bill over 1.5. They had another really good first quarter here. So there's lots and lots of work that make up that $70 billion combined backlog. So we're going to cut costs on the commercial side, just like you would expect, but we're actually trying to do what we can to protect the workforce in the short term, because as I said before, we will come out of this, and having a great workforce and protecting that workforce is of paramount importance.
There's now a pot of money out there for industries that are important to national defense. You certainly qualify. Are you going to apply for any loans from the government?
No, I don't think, we've obviously been studying the liquidity of the combined companies, but, given the cash flows from the defense side of the business, given the cash on the balance sheet, given available credit facilities, I don't think there's any need for us. In fact, maybe the one thing that we should mention is we probably, I know for sure we're going to cut back on share buyback this year. We still believe we can have a strong dividend. Again, I think that's just a testament to the fact that the defense side of our business is so strong and cash flows are so good. We'll power through this.
Are you suspending share buybacks permanently for the rest of the year?
You know, I can't tell you the answer to that today. All I would tell you is we're not going to be doing anything for now. I think what we're waiting to see from both Boeing and Airbus, our two big customers, as well as some of the business jet manufacturers, what their production plans will look like for the next 18 months or so. The airlines also, of course, will be curtailing spending as they curtail their flight schedules. So I think we need to really understand the demand better before we decide if we're going to get back into the share buyback market. Clearly, the business over the long term will have great cash flows. We had talked about $18 to $20 billion of return to capital over the first 3 years. That's probably going to get pushed out a year with all of this turmoil. But again, the fundamentals underlying the business remain strong.
You get most of your revenue from the United States, which is understandable given the business that you're in, but you do have overseas businesses and you do sell into Asia. And I'm wondering, China, the rest of Asia, what's the visibility there right now, given the situation there, particularly in China?
Well, as I mentioned, the air traffic in China is down 60%. We have some overhaul and repair shops in China. Obviously, that business is slow. The inductions are slow because people aren't flying. What we see in the U.S. is really what we see around the world is just a complete slowdown in air traffic. And people are closing borders. It's not unexpected that you would see this. But again, I think that as we think about 2001, after the 9/11 attacks, the aerospace market, it literally collapsed because nobody wanted to fly because they didn't feel safe. It took roughly 2 years to get back to pre-9/11 levels, so almost to the beginning, I think that was, of 2004, when we finally saw really solid growth again. I expect we're going to see a similar trajectory here, and I've told our folks to plan for kind of a 2-year tough spell here because, again, the markets around the world are similar to what we're seeing here in the U.S.
Is a 2-year tough spell, does that go along with the lines of customers like Boeing and Airbus? I mean, what are you hearing from them about the duration and the depth of this slowdown, and then concurrently the impact then back to you?
Right. So we've obviously been having discussions all along with Boeing and Airbus, and I won't speak for them. They are still trying, I would say, to help us figure all of that out from a demand standpoint. And you've got to go airline to airline and see what the airlines are planning to do in terms of capacity cutbacks, in terms of how many airplanes are they going to take this year, how many planes are they going to take next year. There's plenty of work to do in the backlog, and I don't expect to see a lot of cancellations. I think what you're going to see, just like you did after 9/11 and after the financial crisis, you may see some deferrals. And I suspect in the next 2 or 3 weeks, Boeing and Airbus will have a much better view of that, which will inform us in terms of what we need to do on the production floor. For right now, we've tried to keep the factories open because almost all the factories not only have a commercial aerospace component, but also have a defense-related component. So, again, it's important to keep the factories open, to keep our workforce safe, and that's the current challenge. But I think another month before we really understand what the demand picture is going to look like.